Well, what goes up must come down, then probably up again. Apple hit an all-time high yesterday, closing in on a $3 trillion market cap. But a downgrade from UBS leaning on shares today. It sees weaker demand ahead for iPhones. Bullish analyst ratings on the tech giant now sit at a 2-year low. But regardless, the landmark close means Apple stock is up over 40% this year, outpacing the red-hot Nasdaq 100. The valuation means the iPhone maker is now bigger than almost any stock market in the world. Let's see what Dan Ives makes of all this. He's Senior Equity Research Analyst at Wedbush. Good to see you, Dan. So I want to get your take on this. You too. This UBS downgrade from buy to neutral, looking at this persistent softness in the iPhone and services growth and really seeing unfavorable risk reward there.
Look, I think many have bet against Apple this whole year. I mean, from 125 onward. And look, I just think valuation downgrades in this type of cycle that we're going into iPhone 15, and what I view as just a green light for tech. I think valuation downgrades in $3 get you a cup of Dunkin' Donuts coffee.
So with that in mind then, what rating do you have right now on Apple? And what's your price target? What's your 12-month price target?
Yeah, we're 220. I mean, it's a top pick because in my opinion, we're going into a mini super cycle. And I think what's starting to happen now is cook the tactician services is continuing to increase. And I can tell you from being in Asia for a few weeks, checks continue to be extremely bullish when we look at what's really around the corner, an iPhone 15. I think when I look at this quarter, I mean, this is the appetizer before the main event. I still think many investors are offsides in terms of sort of being neutral to underweight on Apple. And I think this is just going to be a golden period for Cupertino yet again.
I mean, we did see all this fanfare, especially, looking ahead to what could be the next iPhone. And then, of course, the mixed reality headset coming out as well. But what should we be thinking in terms of, will this be as big as, say, the Apple Watch in terms of some of the projections that we're seeing? Or is it really too early to sort of have that kind of optimism yet?
Look, I think many investors, I think knee-jerk, they view this $3,500 AR, VR. I believe they sell 150,000 units first year out. And obviously there's, I think, subpar sort of expectations. I think that's missing the point. I think this is really around the developers, what's going to be a new form factor. And it's the start of what I see 12, 18 months down the road of an AI app store for Apple. And I think that ultimately is really where the breadcrumbs are leading. And this is an Apple, they always keep it close to the vest. And I think this is just the start of a much broader strategy with an install base, 2 billion iOS devices, that's unparalleled. And I think that from a sum of the parts, just going back to your valuation comment, sum of the parts, we think services is worth 1.4 trillion, which is why, to get off the Apple story here, I mean, those are like the same that were negative on Manchester, City, as well as Denver Nuggets going into, this year.
You're breaking my heart here with Man City. I'm an Arsenal girl. That it's stinging already. So thank you for twisting the knife there. We are looking at bullish analyst ratings on Apple, sitting at a 2-year low. What do you think they're missing in the story right now? As they're looking at where Apple is now versus, as you say, the future when it comes to some of these, what could be an AI app store for Apple?
I think the New York City cab driver was bearish on Apple coming into this year and broader tech. I think what they're missing is what the install base opportunity, 250 million of 1.2 billion, having upgraded their iPhone 4+ years, services upticking, the sum of the parts now starting to play out. And I think AI ultimately could add $30 to $40 per share. And then you look at that, the chips. I mean, you look at M2, I think that's probably one of the most undervalued innovations coming out of Cupertino, more and more control over their ecosystem, which is why I think Apple continues to be a rock of Gibraltar tech stock that goes higher. We have 3.5 trillion is what I view as fair valuation. I believe this is a $4 trillion market cap by 2025.
And so, and as we've seen this narrow tech rally start to melt up, start to sort of trickle into, some of the broader equities here, how much of a bellwether do you think Apple is when you're trying to sort of look ahead to the broader tech story here?
I think this, along with Redmond, Microsoft, obviously, NVIDIA, Google, clear bellwethers. And I think it's going to broaden out. I mean, the Fed basically having to wave the white flag, pause, and then I believe ultimately cut 6 to 9 months. That's a risk-on rally for tech. And I think bears continue to go into that hibernation mode, even though it's summer. And I think tech continues to rally another 10 to 12% into the rest of the year, despite many yelling fire in a crowd theater.
I will never tire of your analogies. Dan Ives, always great to have you on, Senior Equity Research
Thank
Analyst
you.
at Wedbush. Take care.